Be Wealthy and Smart, episode 817.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to explore, is the U.S. economy slowing down? Because recently, information came out regarding the consumer confidence numbers, and they had significantly stumbled. Now, the reason why we always talk about following consumer confidence is because 70% of the U.S. economy is based on the consumer. So it's the consumer spending, it's how confident they are about buying big ticket items, whether they have plans to go on vacation. Obviously, though, a lot of us are locked down right now, so that's not even an option. So there's a lot of things going on behind the scenes, and the housing market is starting to cool off a bit too. So we're going to talk about what we're seeing in the economy and what might be happening, a little bit foreshadowing what's coming. This article comes to us from Reuters, and it says, U.S. consumer confidence stumbles, COVID-19 sapping economic momentum. And it was written by Lucia Muticani. And it says, U.S. consumer confidence dropped for a second straight month in December as a deterioration in the labor market amid renewed business restrictions to slow the raging pandemic offset the rolling out of a vaccine for COVID-19. The decline in confidence to a 4-month low reported by the Conference Board on Tuesday was the latest indication that the economic recovery from the pandemic was losing steam. Also, because of delays by Congress to approve another rescue package. And I just want to pause here because as of Tuesday night, we now have a response from President Trump to the COVID package that was passed, the $600 per person, $2,400 per family that was passed. He is now saying he is not going to sign that bill and wants Congress to have $2,000 per person, $4,000 per family, or he will not sign it. So we'll see what happens going forward with this. All right, the article goes on to say, the government confirmed on Tuesday that the economy grew at a historic pace in the third quarter, juiced up by more than $3 trillion in pandemic relief. Congress on Monday approved additional fiscal stimulus worth almost $900 billion, but economists said this was insufficient and too late to counter a bleak winter of rising coronavirus infections and layoffs. The storm clouds are growing darker and the worst may be yet to come, said Chris Rupke, chief economist at MUFG in New York. The new coronavirus outbreak means the economy will be flirting with disaster in the first quarter of 2021, where a downturn is possible despite Congress throwing more money our way. The Conference Board's Consumer Confidence Index dropped to a reading of 88.6 this month, the lowest since August, from 92.9 in November. Economists polled by Reuters had forecast the index ticking up to 97 in December. So I just want to say again, instead of 97, it came in at 88.6, quite a bit lower. The index was at 132.6 in February. The cutoff date for the survey was December 14th. 2 vaccines have since been approved for use to combat the respiratory illness, which economists believe will limit further downside in consumer confidence. The survey's present situation measure, based on consumers' assessment of current business and labor market conditions, tumbled to a reading of 90.3 this month from 105.9 in November. The expectations index, based on consumers' short-term outlook for income, business, and labor market conditions, increased to 87.5 from a reading of 84.3 in November. The United States is struggling with a resurgence in new coronavirus cases, with more than 17.78 million people infected and over 317,800 dead, according to a Reuters tally of official data. State and local governments have reimposed restrictions on businesses, undercutting consumer spending and unleashing a fresh wave of layoffs. The decline in consumer confidence followed data this month showing the economy in November added the fewest jobs since the jobs recovery started in May. Retail sales decreased in November for a second straight month, and the number of people filing new claims for unemployment benefits is at a 3-month high. The worsening employment outlook was underscored by the Conference Board survey, which showed its so-called labor market differential, derived from data on respondents' reviews on whether jobs are plentiful or hard to get, tumbled to a reading of minus 0.2 this month from 6.9 in November. That measure closely correlates to the unemployment rate in the Labor Department's employment report. It was as high as 38.3 in August last year. December's contraction strengthens economists' expectations for a decline in non-farm payrolls this month. The government will publish December's employment report in January. Stocks on Wall Street were lower. The dollar rose against a basket of currencies. U.S. Treasury prices were higher. The share of consumers expecting an increase in income rose to 16.8% from 16% in November. The proportion anticipating a drop slipped to 14.3% from 14.5% last month. Fewer consumers expected to purchase homes and motor vehicles over the next 6 months relative to November's survey. But more consumers planned purchases of appliances like refrigerators and television sets. That suggests some cooling ahead for housing, the star of the recovery. A separate report from the National Association of Realtors on Tuesday shows existing home sales fell 2.5% to a seasonally adjusted annual rate of 6.69 million units in November. That followed 5 straight monthly increases. The housing market is being driven by record low interest rates, but surging home prices amid a dearth of properties is sidelining many first-time buyers. Robust housing and consumer spending helped to lower the economy last quarter. Gross domestic product rebounded at a 33.4% annualized rate in the July through September quarter, the Commerce Department said in its third estimate of GDP on Tuesday. That was revised up from the 33.1% pace reported last month and recouped 2/3 of output lost during the pandemic. The economy plunged into recession in February, and output remains 3.4% below its level at the end of 2019. The economy contracted at a 31.4% rate in the April through June quarter, the deepest since the government started keeping records in 1947. 21 industries led by the automobile sector contributed to GDP growth last quarter. Mining was the only drag as cheaper oil weighed on businesses' spending on residential structures like gas and oil well drilling. Corporate profits also rebounded strongly last quarter, but performance has been overtaken by the relentless pandemic, leaving GDP growth estimates for the fourth quarter around a 5% rate. Most economists expect modest growth or even a contraction in the first 3 months of 2021. On the eve of 2021, the economy carries very little momentum, said Gregory Dacko, chief U.S. economist at Oxford Economics in New York. End of article. Well, there you have it. Things are slowing down. Purchases of big-ticket items and houses are slowing down. And we still have a lot of houses off the market that might be in some sort of financial trouble that would normally have gone to foreclosure that have been kept off the market, and therefore the supply of houses has been kept artificially tighter than it normally would be because of the houses in forbearance. So we'll see how this all works out. I do think that we will see more weakness in housing prices next year. And I think it sounds like the economy is getting weaker, as well as unemployment rising a little bit, which is also another indicator of the housing market. If more people are unemployed, usually that does tell us that fewer homes will be sold. So we'll see how that goes. The housing market has been so strong this year. It's been one of the things that has really kept the economy going, that and the trend of this migration that they're talking about, where people are moving out of cities into more rural areas. It looks to me like the market is looking a little weaker. It's been trying to roll over for a while now. Certainly, NASDAQ has been strong and keeps hitting all-time highs, just barely, not big moves up, just little tiny increments up, but enough to make a new all-time high, and it sounds good, while the Dow and the S&P 500 are starting to roll over and look weaker. And as I've been reporting, the fundamentals have been looking weaker in general, which has led the institutional money to be leaving the market in droves. Whether it's the CEO of Pfizer selling his stock the day the vaccine is announced, whether it's the Amazon CEO Jeff Bezos selling his stock, or other insiders selling their stocks, we're just seeing institutional money, I think, shift out of this market and shift a little bit more into precious metals and crypto. So even if they're allocating just 1 to 3% into precious metals and or crypto, that's a big move, and that's a lot of money when you're talking about institutional money. So we will continue to watch the market and report on it to you to give you the earliest indication of what's coming in the market and a little peek at what's ahead. And these articles I choose for you because I think they are one of the most important things that you need to know about the market, and often they have actionable things that are attached to them. So selecting these articles for you are to help you with your investing and with your investment decisions. And as we're getting closer to the Christmas holidays, I want to wish everyone very happy holidays, whatever you're celebrating. And if you are celebrating Christmas, Merry Christmas. I will have a Christmas episode for you, and I just want to take a moment to say thank you to listeners who are new listeners or listeners who have been around for a long time. I'm so grateful for you. Thank you for being here and listening to Be Wealthy and Smart. And I want to remind you, we have our holiday contest going where I'm giving away 25 prizes. You can win 10 of my You're Already a Wealth Heiress books signed by me. And that book was named to the list of all-time best wealth books by Book Authority. I'm giving away 10 of my Wealthy Mindset Blueprint audio sets valued at $197 and 5 one-on-one sessions with me. All you need to do is leave a podcast review for Be Wealthy and Smart on iTunes. That will get your name in the drawing one time. And if you've read the Wealth Heiress book and leave a book review on Amazon, that will get your name in the drawing 2 times. And winners will be announced on the January 13th podcast. So be sure to mark it down on your calendar and tune in to find out if you've won. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.